How are you approaching the macro situation in China? Where are you putting headline growth this year?
We expect growth this year around 5.1%, sharply down obviously from last year, but that's because of the base effect at the beginning of last year. The real story, I think, is from the end of last year, growth around 4%. We expect growth at the end of this year, 5.7%. A couple of drivers for that. Firstly, and I think most controversially, we are expecting property investment to recover in the second half of the year. Things will probably deteriorate for the next 3 or 4 months, but clearly the credit cycle has turned. Historically, that has lifted the property market as well. I think you may well see some of the private property developers continue to struggle, and possibly one or two of them will disappear from the industry. But I expect we will see a property revival in the second half, and that will be important to help support higher GDP growth. We're going to get a little support from fiscal. Fiscal policy was a surprisingly strong drag on growth last year. The government's committed to a very modest fiscal expansion this year, a slightly higher broad fiscal deficit. PBOC has already cut rates once. We think there's a good chance of another 10 basis point cut, but that's probably going to be less important than the fiscal. But again, the broader turn in the credit cycle, typically that leads economic activity, particularly property market, by a good 3 or 4 months.
Michael, it's going to be a bit of a stretch, but, we've been talking about this, the crisis in Ukraine. Should it come to it, a Russian invasion and Western sanctions on Russia, Russia's going to be leaning on China a lot more. And we've seen how close they've become just very recently for support if Russia is not able to monetize their hydrocarbon assets, let's say. It's an oil economy, right? If it does come to pass, just how much can China do in terms of assistance when they've got their own problems, all the stimulus that we've been talking about, that you've been talking about, in order to arrest or cushion a slowing economy?
Well, China will need to continue to buy energy, and if global energy prices are shooting up 30% and 50% in a war scenario, then I can imagine there's room to bargain with the Russians to at least get gas coming in from Russia at maybe a lower price than China would get elsewhere. But a Russia incursion into Ukraine causes, I think, real complications for China from a foreign policy perspective. China is committed to the idea that countries are sovereign within their borders, and there should be no interference from abroad. And it will be challenging, I think, for China to show too much overt support for Russia if indeed they are making such an incursion into a sovereign state. So China will help Russia. They will need to buy energy. Russia will need to sell energy, and they'll trade it in renminbi rather than dollars to get around financial sanctions. But beyond that, I think there's not a lot that China can do to show support for Russia.